G'day, taxpayers. Business confidence, sentiment, consumer sentiment, both erring on the side of not really locking in that upward momentum that we'd seen on the economy in the last few weeks. A bit like the greasy pole, you get halfway up and you slide back down. Well, not quite that bad, but the index of consumer sentiment fell 3%. Admittedly, that's after some solid increases in the prior few readings, but we're in for another month where we've got more pessimists than optimists. In fact, we're 5% below that neutral estimate of 100 index points. So that says to me that with the consumer side of the economy being the pivotal part that's going to see GDP growth lift to 2.5 or even a little bit stronger through 2026, we're not quite there yet in terms of the consumer side, despite slightly better news on household spending and those sorts of issues. Slightly disappointing. The NAB business survey, again, it was sort of more neutral, business confidence conditions sort of ticking up, ticking down a little bit. So the business sector, which has shown, again, like consumers, a hint more optimism in recent months, really aren't locking in that optimism in terms of sustained strength and sustained increases in capex and employment and profitability, these sorts of things. So the NAB survey, again, is consistent with the economy sort of doing okay, but not really getting that momentum that we need to keep the unemployment rate in the low fours or even back towards 3-point-something%, which is, of course, what we all wanted to see. The good news there, I suppose, from the NAB survey is that a lot of the indicators of future inflation, so what have we got? We've got price pressures, selling prices, labour costs, they're all pretty much consistent with an inflation rate in the 2 to 3% target band. The RBA should be delighted to see that. But overall, the numbers that we've seen today really reinforce the need for more interest rate cuts being needed to lock in not only the moderate recovery that we've seen to date, but to sort of give it a bit more momentum. And don't forget that the current cash rate is still restrictive, according to the RBA and anybody else who cares to look at these things. We need to move to at least neutral, if not slightly accommodative. So rate cuts still squarely on the agenda. The sooner the better, in my view. And the numbers today sort of fit with perhaps the need for a tweak lower in interest rates, a couple of tweaks lower, in fact, over the course of the next few months.